Let's talk about Volta charging. I have been wanting to make this video since the announcement of the merger, but haven't been able to. I'm glad I didn't. If you're interested in the EV industry, this is an optimal time to buy into this stock. Since the merger announcement, it has had a pullback. They also just recently hired a Tesla executive onto their team. More on that a little later in the video. For over a decade, Volta has been building a nationwide electric vehicle charging network to drive the world forward. Named after Alessandro Volta, the inventor of the electric battery, Volta's award-winning charging stations benefit brands, consumers, and real estate locations by providing valuable advertising space to businesses and free charging to drivers. Strategically located in places where consumers already spend their time and money, Volta's chargers are among the most used electric vehicle charging stations in the United States. Headquartered in San Francisco, Volta is bringing to communities the means of building a sustainable fueling network for the 21st century. On February 8th, Tortoise Acquisition Corp. II announced a merger with EV charging station network Volta Industries. Volta Industries develops, installs, and operates a network of EV charging stations. The deal will see the combined entity trade on the New York Stock Exchange under VLTA with a valuation of over $2 billion. Volta will net $600 million from the transaction, including a $300 million investment from BlackRock, Fidelity Management and Research, and Neuberger Berman funds that will be used to accelerate the company's charging network build-out. Volta Industries operates a charging network that includes 1,602 stations across the US. If we take a look at their investor deck, they are forecasting a shift in the cost of internal combustion engine vehicles compared to electric vehicles. According to this chart, the battery cost curve is declining drastically since 2016, and EV cars will be less expensive than internal combustion engine vehicles in about 36 months. This chart shows the growth of the projected EV sales with a 30% compounded annual growth rate through 2030. These are some of the big names that are committing to the EV industry. We have Daimler, Volkswagen, GM, Ford, BMW, NIO, Zoox, Polestar, Tesla, Lucid, and Canoo, just to name a few. President Biden seems to stand behind this change and is implementing federal, state, and regulatory utility mandates across the board to support the costs. $500 billion of the revenue is up for grabs. US drivers clock 3 trillion miles per year, costing them $300 billion, and $200 billion of non-fuel amenities and services are also up for grabs, totaling $500 billion. This next section blew my mind. The biggest economic opportunity isn't in fueling dollars. It is in the behavior shift surrounding fueling habits. I will summarize what this chart is trying to outline. By consumers saving money and time from stopping at gasoline stations, they will have more money and time to purchase products from stores. This is just genius. Volta charging infrastructure is based around their advertising charging stations and commercial shopping locations, where the commercial locations will benefit from the consumers and additional time and money. This is fantastic. I could end the video right here. The next deck goes on to talk about how this business model can be a disruptive business model regarding the behavioral and commercial impact on multiple revenue streams, which may unlock large macro opportunities. If we take a look at this map, we're able to see where the current network exists across the US, seen in the dark shading, along with a line of sight to expected 3 to 4 years of development, shaded in lighter blue. These source numbers are based off of Volta's January 1st, 2021 investor deck. I thought this was pretty cool. It looks like the app is user-friendly with a simplistic interface where you would be required to use your email to access various features. It seems to provide the user with availability of chargers in specific locations, notifies you of the charging status, and then costs out any itemized fees with a summary of the energy charge time at the payment page. However, I wonder how much customer data is expected to be leveraged to impact operations, research and development, media sales, or retail demand planning, as mentioned in their deck, and whether they'd be relying on information collected by the app or from the charging station themselves. This Venn diagram shows the Volta ecosystem, noting data, fueling, and media opportunities. What we see here is traditional gas versus those providing EV charging needs, alongside those heading up data or analytics, while also touching on companies that are also invested in media and advertisement sectors. We see Volta at the center point of these companies since they are touching on all three areas in their business model. If we take a look at this chart, we see Volta being compared to other competitors, and some things that stand out are the revenue growth, long-term gross profit margin, and the EBITDA break-even year. And these three sections, we have strong numbers and projections compared to the other companies, where some of them don't even have any projections available in a few of these sections. This press release article from February 16th highlights Chevrolet and Volta partnering on a high-impact campaign to introduce the 2022 Bolt EUV and push GM's overall electrification goal, while displaying the charging station as a sophisticated media network. According to this article, this partnership is just the latest in a series of high-impact campaigns between Volta and Chevrolet, noting that infrastructure, brand awareness, consumer engagement, and EV adoption are all at the heart of their strategy. Another press release from February 18th centers around the newly announced Senior VP of Network Operations, Drew Bennett. Bennett previously served as head of global charging infrastructure at Tesla. He was responsible for customer revenue, product functionality, and construction streamlining. Bennett's quote from this article states, "I believe Volta's model is unique, providing a closer and more valuable interaction between consumers and the businesses that host charging stations." And he acknowledges that more and more US consumers are beginning to recognize this EV revolution. He brings more than a decade in experience to the table working in EV, clean energy, and climate-related capacities. The ticker symbol for the tradable SPAC before the merger is SNPR. When the merger was announced a few weeks ago, it gapped up and it hit a high of $18.33. Since then, we had a gift from the market gods, and we are now at around $14.60. Anywhere around this area is a fantastic price point to buy in. We can potentially see this stock go down to about $13.50 to fill the gap, but I think this is highly unlikely. If so, that would be another great opportunity. As for me, I'm looking at this as a long-term investment. I have an average cost per share at around $15.50. I'm just sitting and holding. I don't really care what the stock does from here on out. For those of you trading the stock or options, these levels are great for a buy. I would buy now and sell at the $18.33 level for a trade. I just opened my new store. If you would like to support this channel, take a look and pick up a t-shirt. Click on the link under the description to go to my store. That's pretty much it for this video. If you liked this video or found this information useful, click the like button, subscribe to the channel, and click the notification bell to see more trading and investing ideas. I'm not a financial advisor, and this is for entertainment purposes only. And as always, timing is everything. Get notified so that you don't miss an opportunity.